Our next panel discussion is titled, How to Make the Most of the Exceptional Location of the Middle East. And to lead this discussion, we will be joined by Mr. Mina Nasif, a visionary in corporate treasury and investment consultancy, known for his deep understanding of regional markets and financial strategy. And joining him on stage, we will have Mr. Simon Williams, economist for MENA HSBC, Mr. Farouk Sousa, Middle East and North Africa economist for Goldman Sachs, and Mr. Karim Adwani, head of global markets trading at Ajman Bank. Ladies and gentlemen, please join me in welcoming Mr. Mina Nasif and our panelists to the stage.
Hello, everyone. I believe we have to make this panel short, as you just said. So we're going to run this in just 30 minutes, hopefully. So I'm very happy to run the second panel today at this conference about how to make the most exceptional use of being in the Middle East between two of most gross region worldwide. I'm very happy also to welcome on the panel here our panel speakers, Simon Williams, economist for MENA from HSBC, and Farouk Sousa, Middle East and North Africa economist from Goldman Sachs, and Karim Adwani, head of trading, Ajman Bank. So I'll start with Farouk. The Middle East sit at the crossroads of Asia and Africa. And as I started, it's two of the most growing region in the world. How to make the most of position to become a true global hub for trade finance and capital growing and attraction.
Thanks, Mina. Thank you, Atika, for having us. I think, first of all, the Middle East isn't one kind of region. It's very, very heterogeneous in the sense that you've got the likes of Egypt and Jordan, and then you also have, on the other hand, the Gulf oil exporting countries. And I think the opportunity set for each of them is quite different. For the Gulf countries, I think the focus is definitely shifting towards AI tech and bridging East and West in that context. For the countries like Egypt, like Jordan, I think the focus is very different. I just came back from Egypt, for example, and they're really focused on opportunities in textiles and white goods, and it's really all about diverting Trump tariffs in the short term. But in the longer term, I think all of the whole region is really going to benefit from the trend towards deglobalization and more importantly, the trend towards nearshoring and reconfiguration of supply chains. That's something that's been happening on and off for the last 20 years. It was accelerated by COVID, and I think, quite frankly, accelerated by Trump tariffs as well. So, I think these are the opportunities that the region has, in front of it, and is very well positioned to take advantage of.
Yeah, well, Simon, I believe it's exciting to be in the middle of Asia and Africa, and being in the middle of this diversity when it comes to currencies, different economic system. What role can the Middle East play in connecting this fragmented market more effectively to each other to serve like a big ecosystem?
I agree with Farouk. I mean, obviously the opportunities and the challenges vary hugely across the region. I recognize the premise of the question that the geography works in our favor, both here in the Gulf and certainly for Egypt, but the geography is just one small part of what potentially allows a region to play such a pivotal role in trade and capital flows. I think the fragmentation of global economy, the difficulty that most parts of the world have, they been made to choose, are they with the US or are they with China? This part of the world, the Gulf in particular, I think is uniquely positioned to be able to be friends with the US and with China, with Russia and Ukraine, with India and Pakistan, with the UK and Europe, and there are very few parts of the world that are able to straddle that divide, and I can already see trade and capital flows beginning to adjust the consequence of that geopolitical divide. So the geography helps. I think the geopolitics helps, but I think what really makes the difference is how open the economies want to be, how capable they are of facilitating capital flows and facilitating trade. And as Farouk says, that strength varies hugely. And one of the reasons why I am most upbeat, more upbeat than I've been in a long time about the outlook for the UAE isn't just about geography, it's about the openness that's run through trade policy, in particular, time when the rest of the world is closing doors. The UAE is wide open to flows of people and of goods and of capital as well. And that's that appetite to be at the heart of that trade and financing system rather than the geography, which I think gives us the opportunities that are there. I guess the area where I'm seeing the biggest changes, and perhaps it's because of the bank that I work for, and the depth of our roots in Asia, is between the Gulf as a whole and Asia as a whole, but China in particular. That feels like a relationship that's been growing and deepening for many years, premised on trade, but I can see the sophistication of that trade rising as well as the value of it rising. And because of this very strong government-to-government relationship and the institutional framework that government relationship is taking, I'm also seeing the confidence to capital to begin to flow both ways as well, both FDI flows and financial market flows as well. So to me, that's what that pivotal role is about. Yes, it's about location, but really it's about policy and ambition and that readiness to be open.
I believe not only the location, but also connection between several economies. Being in the middle have its pros and cons. Moving to Karim here, do you believe that it's important to build a kind of cooperation between regional countries, especially when it comes to its geographic location between Asia and Africa, and how to boost our overall competitiveness and well use this position?
Absolutely, and honored to be among you today. I think, to your point, there's a great blueprint for me, is the European Union, which has a lot of similarities to this part of the world. It started as an association of energy exporter, namely coal producers, and that expanded into a much more powerful economic group, diplomatic security framework, and so on and so forth. So to your point, I think obviously you have three different verticals. There's the mobility of capital, mobility of people, and the mobility of goods. I think in this country in particular can be the blueprint for a wider framework in the GCC. You have fantastic players, for instance, in the mobility of people. There's obviously the airlines, right, Emirates and Etihad, which are some of the best in the world, so connecting people around the world. Then obviously you have the connection on a trade perspective, the DP World, the Etihad Rail, and so on and so forth, that could transform this region into a corridor from east to west and vice versa. There's the obvious mobility of capital, of course. We would benefit very much from uniformization in terms of, let's say, taxation regime, cross-border, also same-day settlement for financial operation. Being an Islamic player, for instance, the Sharia covenants, if we can have a wider acceptance of common covenants, that would also help. So I think by having the blueprint that we have in the UAE extended to neighboring countries, that would be a great value added. I think to the point that the gentleman mentioned just before, with the wider role that the region can and should play, it's always obviously when you have a great economic relationship that also translate in a much stronger peace and cooperation with other countries around the world. So I think it's a great example of leadership, yeah.
Amazing. Simon, as an economist at my favorite bank, and I know that you are
Retail bank.
Yeah.
Universal Bank.
Well, I'm a big fan. Well, I know that you are moving between several markets with HSBC, and I know that you're going to jump to Egypt next week. The Gulf has a deep financial strength. My question is, how can this capital be deployed more strategically to create a broader economic impact?
At home and overseas?
Yeah.
Well, so the two things are running together, and what I'm seeing for some parts of the region is the sovereign wealth funds becoming much more, not aggressive, but much more ambitious in how they're deploying capital outside. The bar that's been set, the levels of return that are expected in both the near term and the long term have definitely risen. And in terms of geography, I'm certainly seeing some continued appetite for assets in the US, but also a growing focus on what Asia can deliver, China in particular, both in the near term and in the long term. I think the orientation of that capital, with a particular focus towards technology as a whole, generative AI capability in particular is very clear, and a desire where possible not just to generate income from outside, but to acquire assets that can start to bring that value chain onshore. That's clearly a big part of the story. There's also the domestic investment which is taking place, and not so much here perhaps, but certainly in Saudi Arabia. What I'm seeing is the sovereign wealth funds taking the role of a development agency in many ways, trying to reorientate some of that capital that previously would have flowed outside into the domestic economy. I think that's a big part of why CapEx has risen so quickly and why I'm starting to see potential growth rise as well. But it's also hugely difficult to create institutions when it's public capital which is being deployed, to ensure the capital is deployed effectively, to ensure the focus is on the return that capital is likely to get, and in particular very difficult to develop an institutional framework where there's competition for that capital to ensure that it's allocated effectively. So I like what's happening outside. I understand the really strong development role it plays inside the region as well, but I have a very strong focus on trying to gauge, to be confident that capital is being well spent to generate growth for long term, not just generate a pickup in activity in the near term.
Amazing. So, Farouk, we are very well known with energy, from oil and gas to the renewable ones only. What needed to turn this energy advantage into a greater global economy opportunity for the region? What is the untapped opportunity here?
I mean, you know, clearly Simon mentioned the diversification play and the capex cycle. That's a really, really important in trying to reduce the importance of energy in the overall economic mix, and kind of trying to create private sector independent non-oil growth drivers. And I think that the progress is being made on that front. You know, initially a lot of that progress was on paper because, you know, the non-oil economy was growing massively, but it was all related to the oil industry. But what we're actually starting to see now is that independent non-oil economic growth, i.e. independent of the oil industry and independent of government, that the share of that is starting to rise pretty significantly in places like Saudi Arabia, which I think is a very encouraging sign. And that has to do not so much with the massive capex programs, but to do with really fundamental things that are happening in the region, and particularly in Saudi Arabia, really to do with social reform. Whole new industries coming up in Saudi Arabia, the hospitality industry, the sports industry, entertainment industry. I mean, you couldn't go to a cinema in Saudi Arabia a few years ago, and now you can see Beyonce concerts. It's transformed in ways that are fundamentally, I think, reducing the long-term importance of oil. But this is an energy sector heavy region. The energy is one of the comparative advantages of the region. I think, you know, green energy is an area that we've seen a lot of focus in the last few years. Now with kind of the rollback of shipping kind of requirements to move over to green energy, perhaps that's a setback for the whole sector. But, you know, I don't know enough about it, but that is an area. But where we are seeing, and I'll repeat myself in the first question, we are seeing a lot of focus on data centers, and on tech. These are extremely energy-intensive sectors. And we've seen huge amounts of investment in Humane in Saudi Arabia, but also Microsoft in the UAE. We're seeing NVIDIA chips, the latest NVIDIA chips being shipped to this region. These are energy-hungry industries which this region and these countries are very, very well poised to take advantage of.
I think what's going to be interesting is to see how well, how successfully the region's able to use the big advantages it gets as a provider of data centers and raw compute power, which, as Farouk says, absolutely plays to the region's strength in terms of capital, space, and the energy that's required. How successfully the region can really build a tech ecosystem off the back of that, because the real value comes not from creating the compute power, it comes from the application of the compute power in ways that generate value. And I think that's still unproven. The ambitions are clear, but one of my fears is that generation of raw compute power can become a bit like the generation of raw crude energy power that we had over the last economic cycle. The region was very good at making oil and gas, but the value was added outside of the region because that's where manufacturing and industry grew up. I think the challenge for this tech focus will be not just to create the data centers and the computing and processing power, but to ensure the value is added inside the region as well.
And I think, just very briefly, I think there's also questions around what are the added value, what are the benefits to the broader economy from focusing on something like data centers? It definitely plays to the strengths, but if the capital is coming from the state, from the public sector, and the return on that capital obviously being amassed by the public sector, then the benefits to the broader economy are probably limited. These are capital intensive, very, very low labor intensive, whatever the word is, intensity, there we go. So very low labor intensity, and these aren't taxed industries. The multipliers effectively into the wider economy are something that are questionable. No doubt they play to the strengths, but how transformative they are for the actual underlying non-oil economy is still an open question.
Well, I couldn't resist to continue in corporate treasury field during the last 17 years. And I'm still doing some also as a hobby for teaching new generation about corporate treasury. I believe that the human element is the fuel to keep economies up and running. So I'd like to ask Karim about outside a few large country, the region isn't heavily populated. Should the Middle East focus more on becoming a magnet for talent and innovation to keep this driving growth?
I think it's a great question, if not the most important question. I think if we look at birth rates around the world that are sadly collapsing, you look at countries like Taiwan, Hong Kong, South Korea, birth rates are somewhere around 0.7, 0.8. Even in societies like in Italy, where family values are celebrated, it collapsed to 1.3. So to me, birth rate, demographics, attracting, nurturing talent, has become a national security concern, essentially, right? There's the point that Farouk mentioned about AI. Obviously, it's going to be a revolution, an order of magnitude higher than the internet revolution. For that, we need data. To store the data, we need data center, and as Simon and Farouk mentioned, it requires a lot of energy, and in the region, we have a lot. But we need the skilled people as well, and at scale. There was a wide range of great initiatives in the country. You're all familiar with the Golden Visa. That went certainly in the right direction to attract, retain, and nurture talents. Then obviously then the next generation of kids, they can go to university here and continue and invest. There's also obviously the push on the startup economy and so on and so forth. So to me, to your point, the demographic element is the most important dimension there.
I cannot agree more. Enabling a new generation is not a luxury or optional for such economies. So Simon, you touched base about the opportunities and an untapped hidden option we have. Now, moving to the challenges, being in the middle of Asia and Africa expose us to be in the middle of conflicts and climate risk also. From your perspective, what needed to build more early signs and ensure long-term economic stability, respecting that we are surrounding with a good level of uncertainties?
Obviously, the climate risk is real, and that focus on renewables is clearly part of the region's short and its long-term story. And I like the idea of the region being a major generator, not just of raw renewable energy, but of using that as the basis for a green industrial economy as well. The geopolitics, the region has come through 2 years of pronounced regional uncertainty pretty well. If I look at tourism flows, at growth numbers, they've kind of shrugged off what has been a period of pronounced geopolitical stress. I look at those political strains really as an opportunity cost and imagine how things might have been or how things might be if those geopolitical uncertainties are taken away, how much higher potential growth could go, how much lower the cost of capital could go if those geopolitical uncertainties were removed, particularly if we had a fully integrated Gulf region. My goodness, what a different regional economy that would be. I guess when I'm thinking about the broad near-term challenges for how the Gulf fares, a lot of it comes down to productivity growth, because the kind of economic expansion we've had, even in the non-oil sector, a lot of that has been about factor consumption. It's been about spending more, about the population rising. When I try to measure how much more efficient that spending has become, how much more productive the incremental labour gains have been, that data is a lot less compelling. And if the story is going to run, and if the region is going to fulfil its potential, then it's not just enjoying the cyclical growth while it's there, it's enjoying the long-term growth that comes from improvements in productivity that's going to be absolutely key.
And to Simon's point as well, I've always been a firm believer that it's a shared prosperity that will be guaranteeing peace also, because obviously when you have strong economic relationship with countries, then you will think twice before having conflicts potentially. So, and that's why the world comes to Dubai, the world comes to the region, and with all that trade that we have, the corridor you mentioned, east and west, I think that is a great added value in terms of stability in that part of the world.
Yeah, that's true. I think everyone is calling to close the panel, and we are about to. So my last question for Farouk. Our economies are open, but still are not very complex to produce. So what the practical step can help moving us from trading hub to producer of a real economic value?
I think it comes down to productivity, as Simon said. Education, skill acquirement, better regulation, a transfer of the growth drivers from the state sector to the private sector, focus on SMEs. I mean, there's so much more that needs to be done and that can be done in this region to transform them into a more well-balanced economy, and one that is more focused on manufacturing. But one of the riddles, I mean, I've been doing this job for as long as Simon has, and where are the natural advantages, where are the competitive advantages of a region like the GCC? It's not in cheap labor, so you can't go into labor-intensive industry, you're not going to outcompete the Chinese. It's not necessarily in high tech. It's without seeming to be disrespectful, it's difficult to identify easily where the comparative advantages lie. They are in things like energy, in location, in resource abundance, and these are sectors that can or cannot lend themselves to greater industrial or manufacturing output. So that's the key, I think, trying to match your competitive advantages with the demand that's out there in the globe. I did want to say one last thing with respect to the regional dynamics and the geopolitics that you mentioned. This is a region that has, also the previous speaker was talking about the inadequacy of global governance and governance institutions in dealing with the new realities of the global economy. And this is a region that over the past 20 years has seen a massive transformation. I mean, if you came to this region in the late 90s, it's completely transformed. And the importance of the GCC economy and the regional economy more generally in the global economy has risen. The region has been a major exporter of capital for the past 20 years and has a very significant position in the global economic financial system. And yet that isn't reflected in the global financial architecture. And similar to China, similar to Brazil and the other BRICS countries, I think what we are likely to see is in a more polarized world, choices having to be made regarding where this region's opportunity set lies. Is it going to be more with the existing world order, with the Washington consensus and with trade and financial links orientated more to the West, or are we going to see a pivot towards the East? And I think that's going to be a very defining theme over the coming decade or so here in this region in terms of growth opportunities.
Thank you so much. So I was pleased to run this panel, and I hope it was light and focused same time. And I'd like to extend my gratitude for the invitation to be on the panel here. Thank you, Simon William, economist for MENA region, HSBC, Farouk Sousa, Middle East and North Africa economist, Goldman Sachs, and Karim Adoni, head of trading, Ajman Bank. Thank you all. Thank you.